consent to collect. So you have a debt with a bank. What kind of bank? What kind of debt is that debt on your credit card? Debt is it in your checkings account, savings account with the bank, or is it credit card, business credit card, right? Because those are different situations and different scenarios. Does Amex Gold Card affect credit utilization since it doesn't have technical limits? Good question. So it took me a little bit to figure it out, but now I figured it out. If you have the Amex Gold Card, the Platinum Card, the Rose Gold, the Plum Card, or the Green Card, those are called charge cards, right? And they have no preset limits to it. So, you can have, yeah, basically you can increase your spending power on those cards, but it's going to report a 0% utilization. You know why? Because with charge cards, you have to pay off the balance in full every month, every 30 days. So that means it's going to report a 0% usage. Does that make sense? So it's not going to report a credit limit to your credit profile to help your credit utilization because there's no preset limits. However, it's also not going to report a high utilization because you're supposed to pay it off in full every 30 days, which means it's going to report a 0% usage. Make sense? Unless you don't pay it. Now, you don't pay it off in those 30 days, most likely Amex will shut down your card, right? They're very strict. They're very strict. As long as you follow their rules, they're amazing. But if you don't follow the rules, they're going to cut you off faster than you can say collections, okay? So collections cannot be removed. It can be removed, yes. Yes, you can remove collections. I'm just saying if you're trying to remove your collections by paying it off, it doesn't do that. 9 out of 10 times. Okay, it happens to a lot of people. Okay, someone comment me. A lot of people will say, and it happened to them. They paid off their collection account, thinking they're doing their good deed, trying to get back on a good foot, but then the collection agency doesn't remove it off your credit, regardless of the balance. So if it shows a $0 balance or $18,000 balance, doesn't matter what the balance is. As long as it's reporting on your credit, it's hurting your credit. So if you want to remove that collection account, okay, one of the first few steps you should take first, in my opinion, is to dispute it with the credit bureaus and delete it off your credit. That's what helps improve your score. When it's no longer reporting on your credit, that's what helps improve your score. Does that make sense? So either do a pay to delete, or you can dispute it and delete it with the credit bureaus. Okay? That's what's going to help improve your score. Especially if that collection account is not yours, you can report it as identity theft, right? On the FTC website. Or, there's a lot of ways to do it, okay? Whatever you want to do it. But at the end of the day, again, just paying it off directly is not going to help. It's not going to remove it. You're going to lose your hard-earned money, and your score is not going to change, okay? So if I was in your shoes, what I would do personally, which is what I did, okay, I had a 530 credit score and 80,000 in collections. Okay, so you have $1,600 in collections. I had 80,000 in collections. What did I do? I went ahead and challenged and fought and fixed my credit. I disputed and deleted 80,000 in collections. That was a combination of student loans in collections, credit cards in collections, and medical collections. Okay, disputed and deleted 80,000 in collections, and that's what made my score soar. Took me from the 500s to the 700s. Now I'm in the 800 club, but during that time, yeah, I was in the 500s. I have $1,500 hospital bill in collections. I have had it over 2 years. Yeah, so paying off that hospital collection account is not going to help improve your score, right? If your number one goal is to improve your score, you want to dispute and delete it off your credit. That's what your first step should be. Your last step, your last option, right? Your last resort is to pay off that collection account, because that's not what helps improve your score, unfortunately. 9 out of 10 times, again, okay? Rinse and repeat. I'm going to say this over and over again because you're new. A lot of you are new to credit and understanding how credit works. 9 out of 10 times, if you pay off a collection account, the collection agency will be happy to take your hard-earned money, but they won't remove it off your report. So as long as it's still reporting on your credit, it's still hurting your credit, regardless of the balance, right? So that sounds a little unfair, which is why I think if you're in that situation, one of the first steps you should do is to dispute it with the bureaus and remove it off your credit. That's what helps your score to soar, okay, and get it off of your credit and improve your credit history. If you negotiate a collection payoff down, will collection agency report it as a partial payment? They'll report it as, yeah, partial. Well, it'll say, I'm not sure exactly what it'll say, but yeah, something to that note. But the point is, you don't want it to report at all. You don't want that collection account to be reporting on your credit at all. It's so you know what I'm saying? If it's still reporting, regardless of how they say, they say it's paid off, okay, but that collection account is still reporting, your score is not going to change. It's still going to be the same. That's the issue, right? Could you dispute it even though it is a legit collection that you owe? Most definitely, okay? This is the thing, guys, is that more times than not, okay, these credit reporting agencies are violating your consumer rights, your federal laws, okay? The government passed these laws to protect us consumers that allows us to also challenge, dispute, and delete any negative item that's reporting on our credit. That's called the Fair Credit Reporting Act, okay, FCRA. This is the Fair Credit Reporting Act. So even the credit reporting agencies need to follow these rules. And in here, okay, if they're reporting information incorrectly, inaccurately, or violating these federal laws, they legally need to comply and remove what you're disputing. Okay? Does that make sense? So what you're doing, if you have any type of legit collection accounts or late payments, is you're putting the burden of proof onto the credit bureaus. When you submit a dispute letter for a collection account, a late payment, charge-off, repo, foreclosure, you're disputing it, okay, and you're putting the burden of proof onto the credit bureaus. So they're going to take your information that you want to open up a dispute, do a reinvestigation on this negative item that's reported in your credit. They're going to do their own homework. They're going to do their own investigation. They're going to do their own due diligence and come up with their own conclusion, right? Independently, separate from you as a consumer. And if they deem it as a violation, incorrect, or inaccurate of the FCRA, Fair Credit Reporting Agency, they legally need to remove it off your credit. Comment yes if that makes sense, okay? So you're leveraging your rights. You're leveraging your consumer rights to challenge, dispute, and delete these negative items that's reported in your credit. In fact, okay, last year in 2023, one of the credit bureaus, TransUnion, got sued by the government for $23 million. Don't believe me? Google it, okay? TransUnion got sued by the government for $23 million because they were reporting people's information incorrectly on their credit report, causing them to get denied for mortgage loans, right? Even on top of that, last year, Navy Federal, had a big no-no against them, okay? Supposedly, they were denying minorities from getting approved with them for mortgage loans, okay? And that's a violation of Equal Credit Opportunity Act. So there was a lot of class action lawsuits against Navy Federal, ongoing to today, okay? Because they're violating the Equal Credit Opportunity Act, okay? Section 805, I believe. Give me a second here. Section 701, 15 U.S.C. 1691, prohibited discrimination. You cannot get denied by discrimination, okay, on the basis of race, color, religion, national origin, sex, marital status, or age. Right here, okay, this is your federal rights, okay? Equal Credit Opportunity Act, guys. This is very powerful. And guess what? This is public information. These are federal laws, so anything that's a federal law is public information. You can get this for free, PDF version, straight from the Federal Trade Commission, right? FTC. Let's go. How I add rental history if I've never rented before. Woo! So I'm going to give you a golden nugget, okay? This is the cool thing. Now, one of my favorite ones is called Rental Karma, okay? To report your rent history. So some people don't realize that your rent history doesn't get automatically recorded and reported to your credit. So if you've been paying diligently month after month, year after year, maybe like 5, 6, 7, 8, 9, 10 years, like comment how many years you've been renting. Has it been 5 years? Has it been 7 years? All those years you've been renting, it's not getting reported to your credit. It's not helping to improve your credit, okay? So some people don't know that, all right? Now, if you want to get credit for all those previous years that you've been making payments so diligently, you want to use these companies that will help you report it to your credit in 7 to 14 days. So one of my favorite ones is Rental Karma. Rental Karma will report your previous years of rent history to your credit in 7 days. And what's unique about them is that they will report up to, at least I've personally seen, up to 14 years of previous rent history. 10 plus years, okay? So wouldn't you want to get credit and credibility for that on your credit report, and your credit's not getting rewarded for that on your credit? Why not get rewarded for that, okay? So Rental Karma will help you report 10 years of your previous credit history, 10 years of your previous perfect payment history on your rent. Okay. Now there's other apps like Rent Reporters, which is also a great app to report your rent. But the difference is that they can only report up to 2 years of your past rent history. If you've been renting for the last 10 years, why not get rewarded for the last 10 years of rent history versus 2 years? You see the difference? That's why I like rental. And the other cool thing about Rental Karma is low key, okay? Low key, anyone can be your landlord. So if you're living with your parents, right? Technically, your parents are your landlord. Yes? So as long as your landlord, whoever that may be, okay, as long as they can vouch for you that you're living in their property and that you've been making payments on time for the last 3, 4, 5, 6, 7, 8, 9, 10 years, Rental Karma will report it to your credit in about 7 days. And on average, it can improve your score 4 points. Okay, if you go to the Rental Karma website, on average, they're able to help people score about 40 points, all the way up to 110 points. So if you want to try to gain the maximum points by reporting your rent history to your credit, I recommend adding 5 years or more of your previous years of rent history. So as you mentioned, you have 10 years of rent history. If you report 10 years of rent history, your likelihood of getting a 40-point increase or even higher, maybe, 100-point increase by reporting your rent to your credit history, that's really solid, right? Credit score has plateaus from 7. Okay. Number 2 is your average credit age. So speaking, like to have a solid 750 score, your average credit age, should be above 2 years. But, I would say it may have it above 3 years to get to that 750 score range. Okay. Like if you want to get into the 800 club, your credit usage needs to be between 1 to 5%, and your average credit age needs to be above 5 years. Again, this is statistically speaking. I know there's people out there that have an 800 credit score with one credit card, and they've only had it for 1 year. I get it. That's like those one-off situations, those like, yeah, you want to, have a 10% credit usage or around that area, and then above a 3-year average credit age. If you want to get into the 800 club, 1 to 5% credit usage and over 4 years of average credit age. Okay? Is that helpful, guys? Yes? No? Maybe so? What's the highest credit score what's the highest credit score to have to obtain the lowest interest rate on a mortgage loan? Ooh, does anyone know that? What do you think, guys and girls? Comment. What do you think is the highest credit score to get the lowest interest rate on a mortgage loan? Is it a 750, 760, 780, 800? Do you need a rate on a mortgage loan? What do you think? Comment. I want to see where people's minds are at. I got 750. That's where you think you'll gain the lowest interest rate on a mortgage loan application. Let's see, you got 750, 850, 800, 760, 750, 720. So general ballpark area is between a 760 to a 780. Okay, if your score is between a 760 to 780, that's where you're going to get the lowest interest rate on a mortgage loan. Anything above a 780, you're pretty much going to get the same interest rate as someone that has a 780. Does that make sense? So, yeah, let's say you have a 780 credit score and your friend has like an 830 credit score, and you're going after the same house. You're both pretty much going to get the same interest rate and the down payment amount. It peaks out between 760 to 780. Okay. Can I say it wasn't my debt, even though it was? LOL. Have a debt of 300 and 200. What kind of debt is it? A collection account? What kind of debt is it? Just signed up for you to fix credit. I'm excited. Let's card. I got a Care Credit card last week and need a bank credit card. Okay, so I mean, technically, you can apply for a credit card now if you want to get a credit card now. Okay, you're just gonna day. It just depends on what your goal is trying to do. If you want to maintain your credit score, you want to pace yourself about every 6 to 12 months. But if you want to do some credit stacking or get some credit funding and do an application sequence, yeah, you can apply for 10 days. Each one you get approved for, it's going to hit your credit though. So as long as you're okay with that, but your main goal is to stack up credit, stack up loans, 0% APR to do. Okay? So yes, technically you can apply for multiple at one time, but you're just going to take a hit on your credit every time you get approved for a new one. Okay? If you want to maintain your score, you want to pace yourself about every 6 to 12 months. Got it? Man, beautiful questions. Okay, if the rose gold has to be paid off in full, why does it give a minimum payment? No, I think it's the statement balance. Okay, so whatever your statement balance is, I guess that's what you could consider a minimum payment. But I would recommend paying it off in full to keep a good relationship with American Express. What's the best credit card or product after cleaning credit for credit boost? Okay, so applying for a new credit card does not boost your score. After you repair your credit, okay, a couple of things you can do is, like I said, add your previous years of rent history. That can help boost your score. Adding trade lines can also boost your score. What's the trade line? It's when you add yourself as an authorized user to someone else's credit card, and you get to inherit that person's credit card history, which goes onto your credit card history, and it improves 4 out of the 5 credit factors that make up your credit score. Woo! Did you get all that? Okay, so let's say you talk to grandma. Okay, grandma has a Hooters credit card. She's had that thing for 10 years. She pays it off every month because granny's a penny pincher and she's really good with her money. Okay, so if granny adds you to her Hooters credit card that's 10 years old and she pays it off every month, you're going to inherit 10 years of perfect payment history, 10 years of credit age, a low credit usage, the credit limits, okay, those are, and then a new account. That all that information is going to get recorded and reported onto your credit to beef up your credit profile and your score. Does that make sense? Comment yes. So if you want to do that, right, that's way to like accelerate your score is to add a trade line. So talk to your mother, your brother, your uncle, your ex, okay, whoever is willing to help you. Now, if you're going to do that option, right, there's 2 things that you got to make sure first if you're going to add a trade line to help boost your score. Number 1 is make sure that credit card has 100% payment history. Make sure there's no late payments reporting with the bureaus on that credit card because you're going to inherit everything, the good, the bad, the ugly, right? So if there's 5 late payments on that credit card and you add yourself as an authorized user to it, guess what? You're going to inherit 5 payments and that's going to hurt your score instead of boost your score. Number 2 is make sure it has a low balance, less than 10% of the credit limit, okay? If that card is maxed out and you add yourself to that card as an authorized user, you're going to inherit a high usage, and that's going to tank your score instead of boost your score. So those are the 2 most important things. And then number 3 is the age, how many years that card has been open, okay? So the more number of years it's been open, the more it's going to help your score as well. But at least make sure it has a perfect payment history, right? No late payments on it, and a low balance. That's a good one to add to your credit to help boost your score, okay? Okay, I know I missed a bunch of other questions. So is a 736 credit score good enough to apply for a home loan? I only have 2 years of credit history. Yes, absolutely. A 736 credit score is a great score to the 600 credit score. Some people didn't realize that. Some people think a perfect credit score to get approved for more. That's not the case. Okay, I've seen a lot of people get approved with a 600 credit. In fact, Carlos, my mortgage lender buddy in California, in December, San Diego, California, with a 597 score. Now the difference is going to be your interest rate, right? Lower the credit score, higher the interest rate, and higher the down payment. Does that make sense? Higher, lower the interest rate, lower the down payment. 580 in New York. I wouldn't doubt it, okay? So that's the difference, though. Let's say you're going after a $500,000 prop, higher interest rate. Now, let's say the future you decide to wait 3 to 6 months to improve your score from the 600s to the 700s. That could drop your interest rate by 1%. Okay, if you can drop your interest rate by 1%, by improving your score from the 600s to the 700s, that could save you about $112,000 in interest fees over a 30-year term. Is that worth it or not? What do you think? If you're a bala on a budget, B-O-B, okay? This is the best way to be a baller on a budget, right? Improving your scores from the 600s to the 700s to drop your interest rate by 1% on a $500,000 property, that's going to save you about $112,000 in interest over a 30-year term. That's six figures in fees that it's going to save you. Or think about it the other way. If you went ahead and applied for a house with this low 600 score, which you can do, you're going to have to pay $112,000 more in interest fees compared to if you waited to improve your score, right? So is it worth it? It's up to you, right? I'm just here. You're using me and abusing me, right, as a tool to learn about credit. Now you got to go and decide what's best for you, right? Is it worth it to get Credit Karma, even though it don't report to TransUnion? It does report to TransUnion. Credit Karma shows your Equifax and TransUnion score. It does not show your Experian score. If you want to look at your Experian score for free, you can download the Experian app. They have a free version, which will show your Experian FICO score. Cool. And then if you want to see your Equifax FICO score, you can download the MyFICO app. The free version of the MyFICO app will show your Equifax FICO score. So between those two apps, getting the free version, you can see your Experian FICO score and your Equifax FICO score. Now, for TransUnion, if you have a Bank of America credit card, Bank of America credit card, Barclays credit card, Discover credit card, they'll show your TransUnion FICO score. So that's a hack where you can look at all three FICO scores for free if you want to go that route. I'll be using VA Home Loan. What do you know about it? But what I do know for VA loans, it's a $0 down payments, okay? And there's a lot of payment assistant programs. You can have, I think, depending on the state you live in, I think you need a 620 and above credit score, maybe a 600 and above credit score to qualify for a VA home loan. Now, of course, it also depends on your income, right? The more money you take, the more debt you take, the more borrowing power you can have. And it also is determined based on your debt to income ratio, right? Your monthly expenses over your monthly income. The higher your debt to income ratio, the lower your borrowing power. You have to put it in effort and discipline to fix your credit. Most definitely, 100%. Yep, I have my FICO Experian app, Bank of America credit card. Let's go, hacking it up. Is the Fidelity Rewards card any good? Gives unlimited 2% cash back. Well, I actually have one myself. It's great. I love it. 25K limit. This is my credit mic, guys, if you didn't realize that, okay? These are all my credit cards, my 55 credit cards, right? And maintaining an 800 plus credit score. Okay, what does person need to add authorized users so it reports to your credit report? Okay, so if you want to help someone, or maybe you want to get added to someone else's credit card as an authorized user to help boost your score, the main account holder, right, the primary account holder, they need to just call the number on the back of their card and then ask to add an authorized user. Or they can log in online and do it online as well to add an authorized user. And then it should report to the authorized user's credits in about 1 to 2 months. It normally takes about 2 months before it reflects onto that authorized user's credit to help improve their score. Cool. What's next? If you open a new credit card with high limit, does it decrease your overall credit utilization? Yes, it does. Okay, that's one way to drop your credit usage without paying off your debt. Okay, so let's think about it this way. Let's do some math. Okay, this is what would happen. Adding trade lines is going to be the same thing. If you add a trade line, it'll do the same thing. You're going to inherit that high credit limit, which will lower your overall credit utilization. Okay, so there's 3 ways to drop your credit usage, which will help improve your score without paying off your debt. I'm not saying do not pay off your debt. This is just a temporary solution, okay, while you're paying off your debt. Number one is if you request a credit limit increase, that could drop your credit usage and boost your score. So let's just say you have a credit card with a $1,000 limit and your balance on that card is $500, right? You use up $500 out of your $1,000 limit on your card. That means you have a 50% usage. Now, if you request for a credit limit increase and they increase your credit limit from $1,000 to $2,000 limit, let's see if you can do the math. Comment below, right? If you increase your credit limit from $1,000 to $2,000 and your balance is still the same, $500, what is your credit usage now? It was 50% when you had that $1,000 limit, but now you increased it to $2,000. Still have the same $500 balance. Now what percentage is your credit usage? Someone do the math, come on. 25%. Comment wow if you didn't realize that, right? It'll drop it from 50% down to 25%. So that can help improve your score. The solution is if you add a trade line, okay? If you add a trade line with a high limit to it. So let's just say, okay, keep the story the same. Let's say you have a credit card, $1,000 limit, okay? Your balance is $500. Now, if you add a trade line, AKA adding yourself to someone else's credit card as an authorized user, let's say that credit card has just keep things simple, has a zero balance on that card. So if you add yourself to that card, now what is your total credit limit? You have one that's $1,000, and then you added that trade line that has $9,000. So between the two, what's your total credit limit? Please, guys and girls, comment. I want to, right, to improve your score. So help me out, engage with me here, okay? So 1,000 plus 9,000. Your total credit limit between the two cards is going to be $10,000, right? And you still have the $500 balance, right? Now, what is your credit utilization? If you have a total of $10,000 credit limit, thank you, there you go, 10K, and your balance is still $500, now what's your credit usage percentage? It is, okay, so 10,000, 10%, so it's 5%, 5%. So you drop credit usage from 50% down to 5% by adding a trade line, okay? So if your credit usage is 50%, your credit score is probably around a 650, right? Now, if you drop your credit usage from a 50% down to 5%, that could potentially get you into the 700 club or the high 700 club just by doing that, okay? Comment wow if you didn't know that, okay? If that was a golden nugget, let me know, okay? Or if you apply for a new credit card that has a high limit, the same thing will apply. It'll help drop your credit usage and improve your score. The lower your credit usage, the higher your credit score, right? Again, of course, you should always pay off your debt. This is just a temporary solution while you're paying off your debt, right, to improve your score. Is that helpful? Yes, no, maybe so. Once you buy a house, how long does it take your credit to recover? About a year. I would say over a year. It takes like over a year. How do I know? Because I just purchased this one, right? 2 years ago. My score dropped like 15 points. It dropped from like an 820 to an 805 after I got that mortgage loan and it reported to my credit. And it took about a year, over a year, to regain those 15 points with the mortgage. So from my personal experience, yeah, it took my credit profile to gain those 15 points that I lost about over a year. Maybe someone else, it'll take longer. Maybe, it may take someone else less time. But for me, from my experience, that's what happened. It took about a year. Okay. Whew. So do they look at card limit usage or overall credit limit usage? So when it comes to your credit score, your credit usage, okay, that's the second biggest factor into your credit score. So the way they calculate your credit usage is in aggregate, right? A total balance and a total credit limit between all of your credit cards combined. Okay? Yeah. Now, when you're applying for credit and loans, okay, the lender is going to look at it as a whole and by each individual account as well. So it's different depending on where you go and where you apply. But when it comes to your credit score, how they calculate your credit score by your credit usage, your credit get checked. Checked by who? How often does your credit get checked by who? Can rental lease agreement collections be removed from credit? Absolutely. I have with people all the time. You know, there's a lot of stories out there that I've helped with. You know, if you have an apartment eviction collection or a lease agreement that went to collections, and then you try to go and lease or rent another place, and they check your credit history. If they see that on your credit history, you know, that's a big red flag for them. That's a high risk for them, and most likely they won't approve. What you can do yourself too, if you want to do yourself, is, you know, dispute and delete that collection account, that apartment eviction collection account, or that the leasing agreement collection account that's reporting your credit. Dispute and delete it off your credit report. That's going to help improve your score and also clear that record. So now, when you go and apply for a lease or rent, and they check your credit, they won't see it on your credit report, which will make them feel safe, less risky. You'll look less risky to them, and they'll approve you for it, or should approve you for it, right? Your approval odds will be a lot higher. Make sense? And I help people do that all the time. Where did you get that card holder? This one specifically, actually, it's a funny story. This is a Ridge wallet, RIDGE. I got this one for free because when I went to Vid Summit, there were some sponsors there, and I showed them my previous wallet. It looked very similar to this. I got it on Amazon. It was a black resin wallet from Amazon, and it was just like this. I was like, yo, I think I need a new wallet, and they saw mine. They're like, dude, we only recommend 12 credit cards on our wallets, the Ridge wallets, and you know, mine looked like this, and then they gave me one for free. But yeah, this one specifically is a Ridge wallet. I have, you know, a few other ones that look just like this. The cool thing about these type of wallets too, they're the only ones that I know that can hold 55 credit cards, right? But in here, they have the RFID, so that way, you know, people can't scan your cards. It's got this RFID on it, so that's what's really cool too. Is getting a line of credit a good idea to pay off credit card debt? No. So there's different ways to help pay off your credit card debt faster, right? And I talk about 10 different ways. If you get a line of credit, it may not necessarily help you pay it off faster. So like a credit card, it's a line of credit, right? So unless you're getting another credit card, aka line of credit, that's what this is, okay? That's what credit cards are. They're lines of credit. If you get a new one that's offering 0% APR for 12 or more months, yes, that can help you pay it off a lot faster, okay? Because what some people don't realize is if you're only making minimum payments on your credit cards, 70% companies, 30% of your minimum payments going towards paying down your debt. Woo! Comment wow if you didn't know that, right? Say it another way, right? Let's say your minimum payment, to keep it simple, is $100 a month. Out of the $100 of your hard-earned money, $70 goes towards interest and fees to the companies, and then $30 goes towards paying down your debt. That's why it takes 3 lifetimes to pay off credit cards if you're making minimum payments, okay? So one idea, okay, this is not advice, is applying for a new credit card that offers 0% APR, 0% interest, 0% fees for 12 or more months. Okay, there's 5 credit cards out there that offer 0% for 21 months. That's almost 2 years of interest free, right? No interest. U.S. Bank, Wells Fargo, Fifth Third Bank, Citibank. There's two Citibanks, okay? 0% for 21 months, almost 2 years. So if you transfer your credit card debt from your old credit cards that's charging you 20 to 30% in fees to the new one that's charging you 0% in fees, okay? Answer this question. Now, when you make your monthly payments on this new card that's charging you 0% in fees, right? What percent of your hard-earned money, what percent of your minimum payment or however much you're paying is going towards paying off your debt. 100% of your minimum payment is literally going towards paying off your debt. Because why? You're getting charged 0% in fees for 12 to 24 months, depending on what you got. What can I do if I have a closed account, but they are paid off, but still show? How do I go about that? Well, closed accounts aren't bad accounts, only if they're reporting as a collection, charged off, repo, foreclosure status. If it's just a closed account and it's reporting current, there's nothing to do with it, no late payments, you want to keep it on your reporting credit. Is it true that your score will go down if you request a credit increase instead of them doing it automatically? It's not 100% true. So it depends on the credit company you're requesting for credit limit increase for. Right? For example, Chase, American Express, Navy Federal, Discover, Capital One, with those credit card companies, when you request for credit limit increase, they do a soft pull and not a hard pull, so it doesn't affect your score. All right, so all you got to do, right, just call the number on the back of your credit card and then ask them, hey, I'm interested in, requesting for a credit limit increase, but before I do, I just want to know if you're going to do a hard pull or soft pull. Right? If I'm gonna get a hard inquiry or a soft inquiry on this request, and so they'll let you know before you even make the move. Yes, we do a soft pull or we do a hard pull, and then you can decide whether you want to move forward with that or not. Make sense? And for the most part, when you do get a credit limit increase approval, that should help increase your score because that lowers your credit usage. Did I answer your question? HVAC dad, let's go. Okay. To transfer, do you just use the new card to pay the old card? Yeah. So these cards, they offer balance transfers, $0 balance transfers. So you can use the new card to do it that way. That is one way, right? If you want to do a balance transfer, that is one way to do it, to transfer your credit card debt from one to the new one that has 0% APR. That's one way to do it, balance transfer, okay? Now, some people are like, yo, you still got to pay that new one because you want to pay 0% in fees for 12 to 24 months, depending on which card and promotion you get. Let's just say, for argument's sake, they're going to charge a balance transfer fee, right? Normally, that's between 3 to 5% if you do a balance transfer fee, transferring your balance from the old credit card to the new one, okay? Getting approved for one of the 5 that I told you about, 0% APR for 20. You do a balance transfer, they charge you 5%, okay? Now, you're going to pay that 5% in interest fees, right? Divide that by 2. That means in 2 years, basically, you're paying 2.5% in fees. All right, so what would you rather pay for the next 2 years? 20 to 30% in interest fees from your old credit card every year, or 2% in interest fees for the next 2 years? Do those numbers still make sense? Right? What would you rather pay? 2.5% in fees each year for the next 2 years, or 20 to 30% in fees each year for the next 2 years? Right? The numbers still make sense to me. Okay? But again, this is not legal financial advice. I'm sure a financial advisor would not advise it. Okay? This is just an idea. These are yours. Okay? The numbers make sense to me. If it doesn't make sense for you, you don't have to do it. Right? You don't have to do it at all. Okay? Now, another option is to consolidate your credit card debt onto a personal loan. Thank you, HVAC Dad. I appreciate it. Okay? Another option to pay off your credit card debt faster is to consolidate your credit card debt onto a personal loan. Right? Because interest rates on personal loans tend to be a lot lower than interest rates on credit cards. I know you're using Peter to pay Paul. However, think about the numbers, okay? If credit card companies, they're designed to charge you high interest rates, 20 to 30%. Even if you have a perfect 850 score, you're still going to get charged 20 to 30% in interest fees because that's how they're designed, okay? Between 10 to 15%, maybe even less than 10%, right? But let's just say, again, for argument's sake, the credit card company is charging you 30% in interest fees, and you get approved for a personal loan, and they approved you for 15% APR. So that means you're dropping your interest rate from 30% to 15%. That's a 50% drop in fees. Okay, now you know less of your monthly payments is going towards fees, which means you're going to save yourself thousands of dollars from paying fees to the companies, and more of your monthly payments is going towards paying off your debt. So it's going to help you to pay off your debt faster. And the balance on the loan, okay, the debt on the loan does not calculate into your credit usage. So by transferring, consolidating your credit card debt from your credit card to the loan, that can drop your credit usage, which will help improve your score as well. I have one for 25.99, exactly. So if you have a credit card charging you 25.99 and you get approved for a personal loan, they approve you for, let's say, 12.5% APR, you dropped your interest rate by 50%. Not everyone can get approved for a loan if the utilization is high and score has dropped. I agree 100%, okay? This is not a one size fits all. This is not going to work for everyone, okay? I 100% agree with you. Not denying that, okay? But does this mean that it's not possible? Does this mean that no one's done it? Absolutely not. A lot of people have done it this way, okay? That's why I said there's multiple ideas, multiple different options, okay? Another option, let's check this out, okay? I call this the Hail Mary play. Let's talk about a Hail Mary play. Okay? Maybe 110%. You use more than what your credit limit is, okay? Yeah, you're most likely not going to get approved for a credit card or loan because you have this maxed out card, right? So let's talk about the Hail Mary, okay? Check out this strategy. Let me know what you think of this, okay? Here it goes. Talk to someone that you know, okay, a family or friend member, mother, brother, uncle, ex, okay, someone that has a decent credit that's willing to help you out. You can have them leverage someone else's credit, have them apply for a loan, okay, to get that low interest rate, low APR, and then use that loan to pay off your credit card debt. Okay, so what's going to happen now? Your credit usage is going to drop, your score is going to increase. Now you can go and apply for a loan, right, and get approved for that off the other person's loan, the one that was helping you out. Okay? Is that an interesting strategy? Yes or no? Leveraging OPC, other people's credit. Okay? Interesting, right? Now, if that's not even an option, you can do the snowball method or the avalanche method, right? Yes, are the people money always works? Huh? Yes, are the people what? You can do the snowball method, okay? Comment yes if you know what the snowball method is, or comment no if you don't know what the snowball method is, okay? That's another option to help pay down your credit card debt faster if all else fails, right? So the snowball method is basically this, okay? The premise behind the snowball method. Let's say you have 5 credit cards, right? And you're trying to pay this off as fast as you can. The most efficient way to do this, right? Arguably the most efficient way to do this is the snowball method, which basically means that you're focusing on one credit card, okay? Making extra payments on one credit card and paying off your credit card debt one at a time versus trying to pay off all of your credit cards at the same time, okay? It's more efficient to focus on paying off one card at a time versus trying to pay off all of your cards at the same time. That's what the snowball method is and the avalanche method, okay? So the way it works is you just make minimum payments on all your credit cards, and then on one of your credit card, the one with the lowest balance, you'll make extra payments, okay, until it's paid off. And then you're going to go to the next card, right, that has the next lowest balance, and make extra payments on that one card. Keep making minimum payments on the rest of the cards until it's paid off, so on and so forth. So it's more efficient and faster and more effective to pay off your credit card debt that way. Now, some people prefer the avalanche method, which is the same idea, but instead of focusing on paying off the credit card with the lowest balance, you focus on paying off the credit card that's charging you the highest interest rate, right? The most amount of interest fees, so on and so forth, okay? Now, there's a third option, which I'm calling the snavalanche method or snowvalanche method. It's a combination of the two, Okay, because if you write down on a piece of paper the balance on your credit card and the interest rate that is charging you, okay, you might notice that the card. So maybe it would be good to tackle that card first, and so on and so forth. And so I call that the snow avalanche. What do you think sounds better, snow avalanche or avalanche? Is this helpful? Which one is the best? They're both great. Great. Okay. Just first of all, okay. So I like the snowball method, right? Focusing on the card with the lowest balance and paying off the quotient reason. Okay. Because if you focus on the card that has the lowest balance, that's going to be the easiest and quickest to pay off. When you pay off a credit card, that's going to give you a sense of accomplishment, right? And that motivation to keep going and to pay off the rest of your cards. Does that make sense? Okay, so for some people, they'll get overwhelmed, like, yo, this is gonna take forever. Like, if you focus on paying off the card that has the highest balance first, it may take you a long time, right? It may take you a long time to pay it off, and that might demotivate you to keep going. You see? So, that's the way I see it too. The snowball method could be more effective for someone, that needs that confidence, right? Those stepping stones to be able to tackle all their debt. That's the way I look at it. Yes, helpful. Please save this live. I most definitely will. Most definitely will. Okay. Hey, bro, what happens once you dispute? Who? Once you dispute what? Okay. So that's why, yeah, I see credit as a three-step process, right? Repair, rebuild, reapply. Okay. Repair your credit if you have negative items on it. Collections, late payments, charge-off, repos, foreclosures, inquiries, bankruptcies. You're in the first step. The first phase is to repair your credit, okay? Because one late payment can drop your score or hold your score back up to 100 points. Okay, I just recently removed someone's $18,000 repo off their credit, and that boosted their score, that jumped their score 169 points. Okay, the more negative items you have, the lower your score, and the worse your credit history looks like, right? Especially if you're applying for credit and loans, okay? They're not only looking at your credit score, but they're more so looking at your credit history, because your credit history debunks your credit mystery. It's a track record.